Hello and welcome to The Global View, the show where we look at ways for investors to make money beyond the ASX listed universe. I'm your host, Olivia Grace Curran. US markets fell sharply after President Donald Trump confirmed tariffs on top trading partners. Wall Street's main stock indexes traded higher earlier in the session but reversed gains in the afternoon, trading to end in the red. After Trump reiterated 25% levies on imports from Mexico and Canada would kick in from Tuesday. The S&P 500 registered its biggest daily percentage drop since December 18. All of the Magnificent Seven stocks ended in negative territory, with AI darling Nvidia pulling back nearly 9%. Shares of electric vehicle maker Tesla slid around 3%, reversing an earlier pop in the stock. Stocks set to take a direct hit from the tariffs or retaliation by the targeted countries also fell. GM and Ford hit their lows of the session after Trump's comments. Meanwhile, defensive stocks moved higher. Shares of Philip Morris International added around 2%, while PepsiCo, Procter & Gamble and Johnson & Johnson all gained. Crypto stocks such as MicroStrategy and Coinbase rose early in the session on Trump's proposal for a reserve of digital assets. However, they reversed gains. Kroger fell after the grocery chain's chairman and CEO Rodney McMullen resigned, following an internal investigation into his personal conduct. And shares of Michael Kors owner Capri Holdings pushed higher. Following reports, Prada is moving closer to a nearly 1.5 billion euros deal to buy Versace from Capri Holdings. US President Donald Trump says there is no chance for Mexico or Canada to prevent 25% tariffs from taking effect on Tuesday. At a press conference on Monday afternoon, Trump said there was no room left for negotiations that would avert the tariffs by curbing fentanyl flows into the US. Trump also said reciprocal tariffs would take effect on countries that impose duties on US products from April 2nd. Meanwhile, fresh economic data out of the US painted a worrying picture. An ISM survey showed manufacturing was steady in February, but a measure tracking forward-looking new orders contracted to 48.6 last month from 55.1 in January. It comes as St. Louis Federal Reserve President Alberto Mussolem said the risks for higher inflation are on the rise. During a keynote address at the National Association for Business Economics conference, Mussolem noted that his baseline case is for inflation to gradually move towards the central bank's 2%. Yields extended slight declines, with the benchmark 10-year US Treasury note hitting 4.168% following the ISM data. The US dollar index has eased. The Aussie up slightly, currently buying 62.2 US cents. And Bitcoin has backpedaled after recent gains. Concerns about the economic impact of Trump tariffs overshadowing earlier excitement about the US strategic crypto reserve. Oil prices have fallen to a 12-week low on reports OPEC will proceed with a planned oil output increase in April. There are also fears US tariffs could hurt global economic growth and oil demand. Brent futures fell 0.1% to 72.71 US a barrel. Gold prices rose over 1% after falling to a 3-week low in the previous session, a result of a weaker dollar and safe haven buying amid concerns over US Trump's tariff policies. Copper prices have also risen on a weaker dollar and stronger industrial activity in China, while iron ore futures have fallen for a 6th straight session amid rising trade tensions between the US and China. For more on what's moving US markets, Steve Snosnik from Interactive Brokers joins me now. Great to see you, Steve. So we've seen Wall Street tumble. Tell us how it all unfolded.
Well, Olivia, first of all, good morning. And, Friday afternoon, we had one of the most, I'm going to call it phony rallies that I could recall in a while. It was month end. It was clear that someone was trying to mark up the close. on Friday. I think because month end coincided with Friday, and therefore you had the combination of daily expirations and weekly expirations. It just sort of took off in a bizarre way on Friday, and I tweeted about it, just saying this is one of the most crazy things I've seen. And so this morning we, of course, opened higher because they try to open the futures higher every morning, regardless of what the news overseas might be. And then, we there was no follow through. It's hard to expect that there would be after that big of a move, even if it was the first of the month. And then we sold off, and so we gave back most of Friday's late gains and went back to where we were trading most of the day Friday. Then the president had a press conference with Taiwan Semi, and sort of almost as an afterthought. Truthfully, the business network that I was watching had moved away from the press conference and sort of burst in saying, "Oh, by the way," he says, "tariffs are starting tomorrow morning." He'd alluded to this, but there's the president's addressing a joint session of Congress tomorrow night, so there was some thought that they might be postponed or there might be some more talking points. But as far as we could tell now, they're going in at midnight, and the market, needless to say, is not a big fan of that.
Really, I guess, shows that Trump does mean business. So, where do you see things going tomorrow when the market reopens?
Well, I mean, let's see if these orders have been signed. I believe the China order has been signed, which in that case it's taking it up, it's taking it from 10% to 20%, which still is oddly lower than Mexico and Canada, which we can debate the policy of that another time. Um, but essentially, the market's got to wait and see what's happening next. A lot will come out of what he says tomorrow in front of Congress, how combative he will be, because we are looking at the potential for a government shutdown as early as the 14th of the month, which is less than 2 weeks away. And it doesn't look like, there's some hope that there's a budget deal to be made, but it's not clear that that's going to happen. In the meantime, I see below you mentioned they're putting up about the ISM. Today's was the latest in a series of relatively weak numbers, where the ISM, manufacturing PMI, yeah, it was barely above 50, which is expansion versus contraction, but it was well below what people were expecting. And you see that orange line there on the right hand side shooting higher. That's prices paid. So the combination of lower output and higher prices is not a good one for markets. We're getting a growth scare and the potential for some inflationary aspects coming through at the same time, regardless of what the St. Louis Fed president said. It's nice that he thinks this is going to come down. The prices are going to ease over time, but it doesn't appear that that's the case, at least among the market's mentality. And that's where you can run into the problems where things could get a little nasty before the Fed is willing to react. That's a tough situation.
And so, the next key data point would be the jobs report coming out on Friday. What are we expecting there?
Somewhere in the 150,000 range is what's expected, but there's a bit of a wild card here because it depends how quickly some of the claims, the jobless claims on the unemployment side are going to be filed because we've already started to see government layoffs. It's not clear if they're going to be in the numbers yet or not. But so you could get some wild moves, particularly on the downside in terms of the unemployment, probably not affecting the payrolls number so much, but the unemployment number could go higher because you have government employees being laid off or pushed out of their jobs or whatever you want to call it, but many of them will be filing for unemployment if this is permanent. And so there's that whole aspect that we have to get concerned with. So if you're looking again at a labor market that's not very robust, at the same time that prices paid by businesses are going up, that's a tough situation. And we've seen that reflected in consumer sentiment numbers, which have been terrible for the most part. And Walmart confirmed it when they basically give a profit warning. And at the same time, consumers are very fearful of higher prices because of bird flu raising the price of eggs and other things. So this is it's not I don't mean to sound dire, but we definitely have to navigate some tricky waters here.
And Bitcoin has had a bit of a journey over the last few days. What was the reaction following Trump's comments this afternoon?
Bit of a journey that was so eloquent, Olivia. That was wonderful because that's a great way of putting it. We definitely have been selling off because I think there's been this move away from risk assets. I think the market was getting a little concerned that there was going to be, that we hadn't heard anything from the president regarding his strategic Bitcoin initiatives. Then obviously it rallied, during our time over the weekend, dramatically on it. But there was no follow. Again, there was like no follow through here. And as risk assets sold off, so did Bitcoin. There's a lot of skepticism. It's not clear how this is going to be paid for. There was nothing really in there about whether they're just going to use the Bitcoins that they've seized. But then there were some other coins in there that would have to be paid for with new money. It was a little odd that the five coins that are mentioned happen to be large holdings of our new quote unquote crypto czar. So there's a little skepticism there. But in general, this is what we've seen a bunch of times where you've had these sharp moves where everybody rushes into it doesn't matter what the product is. Bitcoin is just probably the most compressed time frame where you've seen people rush into things. We could see it in whether it's Palantir, Hims and Hers, even Meta, which had 20 up days in a row only to give most of it back. I think this was sort of emblematic of the everybody chasing a trend and then then finding there's a lack of follow through. In the case of Bitcoin, everything tends to have a more compressed time frame, and I think that's what we saw today.
Certainly an interesting time in markets. Thanks for joining us, Steve. Steve Sosnick from Interactive Brokers. And just before we go, getting one final check on where the local market is set to open when trade gets underway. SPI futures down 71 points. That does it for this edition of The Global View. Stick around, the open is coming up next.